have you. So first of all, this stock has done so, I mean, who would have thought Chipotle would be a stay-at-home stock? What have they primarily benefited from, and can that benefit last no matter what happens with the pandemic?
Yeah, this stock is going from recovery and going to absolutely accelerate into growth mode. So we're still very excited about it. It's our highest conviction investment recommendation. And it really has been the digital footprint. Thinking about everything pretty much being taken off premise these days, whether that is through the Chipotle or through delivery in the marketplace or through rapid pickup, they're doing $2 million out of those boxes. That can be 50 to 100% more than their peers on a good day.
Wow. So tell me about glitter and guac.
Absolutely. One of the really cool things that we noticed this quarter was management and really the entire team creating access and awareness in the communities that they serve, but beyond their own physical presence. The partnership with Elf was really cool. They met their teen population where they are. They have a Shopify relationship that brings their farmers to their consumers. And I even think there's more access points with their expansion in the delivery marketplace. So all around, very cute, cool community presence this quarter.
Yeah, I'm excited for the lemonade, but, I do wonder if they need to accelerate some of their product innovation. Cauliflower rice has been tested out. If there needs to just be a little bit more innovation in that category to keep the experience fresh for diners, and if that becomes a drag at all on, that investment or on earnings or anything like that.
Well, I think we have to see what the consumer really wants right now. That's what the consumer wants. Chipotle can deliver. I think we want a little bit of the sure thing, especially right now. That being said, I think it's about the innovations they're going to have and how they'll allow access to those in different platforms. Think about direct delivery as an example, where they've done a great job with a direct relationship through their own platform, getting the customer data. That would be a great place to launch a new product. And when they did do it on the digital front, it all hits the second make line, doesn't hit the front make line, and it's a very smooth operation all around.
Speaking of that, it's interesting, and Kate had pointed this out a few weeks ago, but because of digital, they're having to hire more. I think that's counterintuitive for a lot of people, but in order to keep the process efficient for both digital and in-store, it's labor intensive. Does that become a longer-term headwind?
I don't think a longer-term headwind. I mean, I think it's a practical investment. The Chipotle four-wall economic model has always been centered on leveraging a food cost and making human capital investments. Frankly, the power of making those human capital investments and being special at the store level absolutely, is shared by employees that interact frontline with the customer. So I think it's a great investment. It doesn't hold back the P&L in any sense, because what's happening is those going to be digital dollars that they're going to bring in. And if they're a rapid pickup order, as an example, and even a Chipotle, they can be higher than an in-store order at the point of sale. Of course, delivery can be lower, but net, they're both growing hundreds of %. And as long as they're both growing around the same levels, you get an equal margin, if not better, even with the labor investment.